Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Well, through the show, it's really the midcaps which are firing away. It's a 700-point gain that we are seeing, and this is after 2 consecutive days of a 1,000-point fall that we've seen. So some recovery on the cards. The Nifty has come off from the highs, but still, again, it's recovered from the lows as well. So recovery is something that the bulls like after the big fall that we saw.
That's right. The mid-cap IT space is firing away. The mid-cap index was down 5% in just the last 2 trading sessions. It's a good bounce back from that, but quite a lot lined up on the show. Let's start off with the top headlines. Stocks bounced after a weak open with mid-caps leading the charge. IT and consumer durables are prominent gainers, while pharma and private banks drag.
IT index surges over 3% with mid-cap stocks leading the charge. Stocks like Persistent, Coforge surge over 10% and others follow after strong earnings.
NBFC stocks see a mixed reaction to their Q2 earnings. Canfin Home surges after its assets under management surged nearly 10% on a year-on-year basis. M&M Finance corrects after the management revises downwards its guidance for FY25.
Amber Enterprises surges more than 12% in trade after reporting strong Q2 numbers driven by room AC demand and lower channel inventories.
Paytm owner 197 Communications get NPCI's nods to onboard UPI customers 9 months after RBI barred it from acquiring new users. The move comes as a fillip for the payments-led platform.
Okay, all right. There's a footage just coming in from the BRICS summit, so we'll just cut across to that in a bit. You will be able to see PM Narendra Modi, Russian President Vladimir Putin, Chinese President Xi Jinping and others. The 2024 BRICS summit is the 16th annual BRICS summit and currently is taking place in Kazan, Russia from 22nd October to 24th October. This is the first BRICS summit to include Egypt, Ethiopia, Iran and the United Arab Emirates as members following their accession to organization at the 15th BRICS summit. All right, we'll keep getting you updates from what's happening at the summit as well. We have some big member nations which are a part of this one, but we do have Bajaj Finserv's numbers which are flashing for you at the bottom of your screen. We'll get Abhishek in just a bit to understand what the numbers really looked like. At the bottom line, it was a profit growth of 8% on a YOY basis, and that is something that the street is liking for now. It's up around 2.5%. The total income is up 32%. Profit after tax is up around 8%. And we do have the general insurance's profit after tax, which is up around 6%. The life insurance net of new business value, that is where the profits are up 3% on a YOY basis. Of course, we'll need to get more details in terms of the internals as well. The company says that the asset, Bajaj Finserv's asset management recorded assets under management at around 16,293 crore rupees. And other aspects as well, which of course we'll discuss in greater detail.
Well, that's right. Another important aspect as far as this particular set of results is concerned. Remember, yesterday you did see the news flash about how Alliance was likely to exit its partnership with Bajaj Finserv insurance arms. So any clarity on that also is something that the street will be looking forward to. But Hormaz is standing by the wall. All of the top mid-cap movers are on his list. Hormaz, over to you.
Some relief finally after the kind of sell-off that you have seen over Monday and Tuesday with the broader markets firmly in the green. The question is whether it sustains in the final couple of hours of the trading session. Start off with earnings reactions, and finally for a change the earnings reactions are more extreme towards the positive side today, barring a few. Persistent Systems and Coforge leading the pack. Max Financial 2 is up 10%. Amber Enterprises at a record high. Chennai Petro is the only one that is sulking in terms of earnings reactions on the extreme front. 10.5% lower there after the Q2 loss that it reported. But the Persistent Systems and Coforge impact has rubbed off on a lot of mid-cap IT names as well. Take a look at First Source, up 13.5% at the highest point of the day. Oracle Financial, Emphasis, L&T Tech, all of them seeing gains of anywhere between 4.5% to 5.5%. Stocks that are not doing very well in today's trading session. At PNC Infratech down for the third day in a row now after a 20% fall, another 7% yesterday and another 4.5% gone today. Gujarat Flow Fluoro on the back of some news flow on the fundraise coming in. ABB India and Cochin Shipyard has now halved from its peak. Stocks that are doing well on the back of strong volumes in today's session. BLS International up almost 10%. GMDC, another earnings reaction that is 10.5% higher. Deepak Fertilizers 16% higher now, and HEG doing very well on the back of strong volumes. And some other mid-cap gainers in today's session. BSC is on the list today after a while, 6.5% higher. Paytm, positive news flow, 11% higher on the stock there, and PNB Housing too having a good day at the office. Back to you guys.
Right, so some of them having a good day in the office today. Thank you so much, Urmas, for joining in with that list. Let's do one thing. Let's leave you with some good news as we slip into the break. 1 million Indians are now making smarter investments with the help of Money Control Pro. Money Control Pro, which is part of the listed entity Network 18, has crossed the milestone of 1 million paying subscribers. The site closed September at over 53 million unique visitors, nearly 30% higher than its closest competitor, ET, underlying the fact that Money Control Pro is India's platform of choice when it comes to making financial decisions. If you haven't subscribed yet, scan the barcode on your screen to become a member of the Money Control Pro family and help yourself make better financial decisions.
Money Control also celebrated the 1 million subscriber landmark this morning by ringing the opening bell at the National Stock Exchange. The editorial team of Money Control Pro was also joined by India's leading investors, market minds and movers and shakers, including Ashish Chauhan, the MD and CEO of the National Stock Exchange, Samir Arora from Helios Capital, and Edelweiss's Rashesh Shah for a special chat on the power of Indian equities.
Welcome back. You're still tuned into Midcap Radar. Let's go across to Reema. She's joining us with the analysis of KPIT Tech, which just reported numbers a while back. Reema?
Thanks so much for that. So KPIT Tech has reported a good set of numbers, largely steady, but this stock is not reacting because it's already run up close to about 400% in the last 3 years. So on the top line, rupee revenue is up nearly 8% quarter on quarter. Year on year, it's up 23%. Constant currency revenue growth is close to about 5% on a sequential basis. For the first half of the year, the company's top line growth is at 23.5%. Margins for Q2 have come in at 20.5%. This is slightly lower sequentially, but up, on a year-on-year basis, but it's in line with the company's guidance. As I said, the stock has done very, very well over the last 3 years. It's up 400%. The board has also approved a fund raise to the tune of 2,880 crore. This is over and above the 960 crore of cash that the company is sitting on. And the company has said that this is to evaluate certain strategic opportunities, but they will raise the money only when these strategic opportunities hit the advanced stages. So there is a fundraise announcement. Just to recap it, FY25 guidance of 18 to 20%, 22% top line revenue growth has been reaffirmed, and even the margin guidance of 20.5% has been maintained. Back to you.
Thank you so much for that, Reema. Putting the spotlight as far as KPIT Tech is concerned. Moving on, NIT Learning Solutions is the company in focus. The company just reported its Q2 earnings. The net profit came in 21% higher, but its margins have contracted. To discuss this and more, we have joined by Vijay Tharani, the co-founder of NIT and the vice chairman and managing director at NIT Learning Solutions. Good afternoon, Mr. Tharani. Thank you so much for joining us. We just had a look at the investor presentation that you've just uploaded onto the BSE website. It appears as though BFSI this time around has kicked in, but sequentially some softness is seen. Take us to the highlights of Q2.
Yeah, okay. So I think Q2 is for historical reasons, is a slightly softer quarter, if you see every year. But this year, in addition to being that, and that, by the way, happens because of holidays in Europe and stuff like that, also because of how professional services and consulting firms, for them, the previous quarter has been their highest. So they start their first quarter, most of them have this as their first quarter, they start on a lower note. But in this case, we also had the impact of the North America real estate contract that we have in North America for trading realtors. That took a dip a fairly strong dip because of the interest rates as well as what else is happening in that part of the world. So I think those are some of the contributors. And of course, the professional services and consulting have also been lower, even though they are historically lower, but they've been a little lower than what they should have been.
So, Mr. Thadani, what is the outlook for the second half? Will you be able to do the revenue growth guidance that you had given of 12 to 14%, EBITDA margins of 20 to 24%? Asking because EBITDA margins have fallen on a YOY basis. Is this because of the same reason that you just mentioned?
No. EBITDA margins that we have seen are because of the product mix. In fact, they are fairly robust. The EBITDA margin at 24% is actually little beyond what we were expecting. And I think we will continue to see that 22 to 24% margin for the rest of the year, with the margin being on the higher side of the 22-24 range. So we are very well placed as far as the margin is concerned. On the growth, given the multiple environmental conditions which are happening, where economic indicators are very strong, but the sentiment is weak, and I think cost cutting is the real issue. I think in medium term, it offers a great opportunity for us because whenever cost cutting becomes the driver, outsourcing increases, and that's our main business. And I think we are very well positioned to recover from this in medium term. But for the year, our guidance now will be 7% plus.
Okay, so you are saying guidance will be 7% plus versus 12 to 14% earlier.
That's right.
So
And
the
that's
reason
because
for
of the
this...
weakness. Sorry?
Yes, please go ahead. You were saying that is because of?
The weakness in the environment. As I said, the economic indicators are good, but the sentiment is weak. And and therefore, while we have a very good contract base, we have very good wins this quarter also. We got 2 new MTS contracts. I think in the short term, while we recover from these, and as you know, there are multiple macroeconomic indicators at work. So I think while we will recover in the second half, our second half will do much better than the first half. But I think we are running about a quarter behind in order for us to meet the projections that we had talked about.
Got that, Mr. Thadani. You've also mentioned that you have a 100% retention rate in terms of actually going ahead and renewals. Now, give us a sense of these renewals. Are they happening at the same levels, or are you seeing some cost cutting? Are they happening at slightly lower levels compared to what it was last year?
No, in fact, the renewals are actually pretty good, and renewals start with an expansion as well because they are happy with us and they increase the level of work. What happens is what was traditional consumption, people have been cautious in consuming the same amount of learning given this uncertainties in that one. But I think all these are very short-term issues. We are very well positioned in our overall guidance over the years.
Exactly. That's what I was going to ask you, because you do have a long-term guidance, Mr. Thadani. You're targeting $400 to $500 million of revenues by FY27, which could mean a CAGR of 30%. That's on track, right?
Yes. That, of course, also includes inorganic. And,
yes.
And definitely we have opportunities there also.
So any inorganic opportunities that we can look forward to this year itself, anything that's in the pipeline and the street can hear from you?
Many in the pipeline, and you will hear them as soon as they are finalized.
So is there a kitty for acquisitions that you've kept aside?
Yes. We have more than 700 crores cash sitting in the bank. In fact, we are adding cash in that bank, in that account as we go along. And I think we are building up the kitty. We did one acquisition, as you know, St. Charles Consulting. And that acquisition has played out well, and I'm sure it will play out well in the future as well. But overall, I think there is opportunity, given the way our business is structured and given the way the opportunities are coming up. I think our generative AI practice has really taken a pole position, and I think that will be a very big contributor to our growth as we go forward. Because more and more clients and the learning is benefiting a lot from AI.
Mr. Tadani, on a year-on-year basis, last year around BFSI contributed close to 8% of your total revenues. This time around, it's close to 14%. So going forward, how do you see the revenue mix? And you've also given some positive commentary as far as BFSI is concerned. So do you see that mix trending higher?
Yeah, see, at this point of time, BFSI is sitting on a lot of money with high interest rates, right? And also BFSI is going through a major transformation, the digital transformation, which is happening in the world. And three, with the purse strings loosened, I think they are in a hurry to be on top of the technology curve. And I think to that extent, it presents a great opportunity. So I would say BFSI and pharma, life sciences, they are two sectors which are doing very well. Technology is a sector which is beginning to recover now, and I think we will see that contributor. These are three out of the big four sectors that we have always been very, very positive about. So 3 out of 4 are actually at this point of time doing well. We do believe professional services and consulting, which is right now taken a small dip, but I think they will recover over a period of time as things stabilize and as the sentiment starts improving with the interest rates coming down and with the buoyancy in the environment and more clarity. I think uncertainty is the single largest contributor for holding people spending on learning and development.
Totally makes sense, Mr. Thadani. Thank you so much for joining in today and giving us a sense of what's happening on ground, right? And that gives more perspective of what the ground reality is like. Thank you so much for joining in today and giving us all those insights. So that's the word coming in from NIIT Learning, talking about some pressures on ground, some of the segments doing well, technology is coming back, but still they have cut their growth guidance to 7% versus 12 to 13% earlier. We'll slip into a short break. When we come back, we'll talk more about markets and a lot of stock-specific action. Stay tuned for that.
Welcome back to Mid-Cap Radar. Well, Bajaj Finserv just delivered its Q2 results some while ago. Abhishek joins us with the earnings fine print.
Well, Vivek, to begin with, it's a bit of mixed bag with reference to the general insurance having a few one-offs and life insurance being very strong. So to begin with, in general insurance, they have seen spillover of government's health business to October, and that impacted their top line. So the gross written premium is down 19.55% on a YOY basis, while it is up 23.3% on a sequential basis. Now, ex of government, the business would have grown by 11% on a YY basis. So NatCat claim is there of about 45 crore, which led to net loss of 48 crore for the company. This compares to a PAT of about 37 crore on a year-on-year basis and about 16 crore in the previous quarter. So combined ratio has improved sequentially to 101.4% versus 103.7% in the previous quarter. However, claim ratio has increased to 79.7% when compared to 78% in the same quarter last year and about 77.1% in the previous quarter. AUM growth in the general insurance business is about 8.3% YOY and about 0.9% sequentially. Life insurance numbers are pretty strong over here, both YOY and quarter-on-quarter. Gross written premium is up 22.5% YOY and about 30.5% on a sequential basis. The new business premium growth is about 26% sequentially. So the renewal premium growth is about 32.8% YOY and about 35% sequentially to about 3,342 crores. PAT came in at 148 crores, which was up 52.5% on a sequential basis. Their AUM growth is also very healthy in the life insurance business. AUM growth is about 24.8% YOY and about 5.3% sequentially. Back to you.
Okay, all right. That's about Bajaj Finserv. The stock is up around 3% as we speak, and earnings, they keep trickling in. So we'll keep getting you the analysis and updates there as well. But for now, we'll take your leave on this edition of Mid-Cap Radar. Stay tuned, your stocks when we return.